All right, guys, we've got an explosive video for you today on Tesla, and we're utilizing the Iron Condor with a pre-earnings trade that's going to provide some explosive profits. And at the same time, we're going to have a really wide safety net, as with options and leverage, we've always got to be mindful of risk. Before we get started, be sure and hit the like and subscribe buttons down below. Let's get at least 100 likes. Also, be sure and download the free options workshop in the link below. It talks about the two main benefits of trading options over buying stocks. Guys, Tesla is known for being a highly volatile stock, but it has had a recent move up with recently with Elon Musk and the new administration coming in and them kind of buddying up. That's been good for Tesla. There's some other reasons as well. They've got the robotaxi coming out and some other things. But what I like about the Iron Condor strategy right now is it's had that move up. So I think for the reasons that it's got going on that it had that move up, I think that it's going to stay in that range and trade in a range, because prior to that, it was at a lower range and it traded in that range at that time. So now we're at a little bit higher range. I expect it to stay in that range. We've got earnings coming up on January 22nd, and the options expiration that we're looking at is January 20th. So it's before the options or before the earnings report. So it's still got high IV, which is great. So a few of the reasons for implementing an Iron Condor in Tesla that we can benefit from is high implied volatility around the earnings event, even though we're going to be expiring right before earnings. And then we're going to take advantage of that time decay or theta decay. It's going to be working in our favor with the Iron Condor. And we're going to have a really wide profit range that accommodates some price movement. Guys, to craft the perfect Iron Condor in Tesla, we want to select the correct strikes. Now, we want to base our strike selection around delta. So we want to choose our short strikes with deltas around 0.25 to 0.3, so around the 30 delta. And typically this range provides a good balance between the probability of profit and potential returns. And we want to consider implied volatility, which we already spoke about. And we sell options, so we're selling a put credit spread and a call credit spread. And in high IV, implied volatility, it allows us to collect large premiums. And we want to balance our risk and reward. So we want to aim to collect about 1/3 the width of the strikes. So I'm going to go $10 wides, and you'll see that on the live trade that we're going to do. And we want to collect around $300. And then we want to adjust for market bias. In this case, I'm probably just going to go right in the middle. That's what I normally do on my Iron Condors, because the market is what the market is, the pricing. So I don't have a particularly bullish or bearish outlook on Tesla at this point. And the width of the spreads, we're going to go $10 wide, but of course, the wider that you make your spread between the short and long strikes on both the put side and the credit call side, then you're going to also increase the risk. So consider your risk tolerance when setting the width of the spread. By the way, if you'd like to receive the free options strategies trading guide that outlines all the strategies and how to manage them, comment options guide down below and I'll send you the link. Okay, guys, so let's look at Iron Condor option trade in Tesla. So I'm utilizing the Tastytrade option trading platform. There's a link down below, and if you utilize that link, they will offer you some benefits. And I also have a link to Moomoo. I use that as well. So if you don't have either of those, check those out. And so on Tastytrade, we're going to punch in right here, TSLA, the ticker, in the upper left, and we're going to be on the trade page right here and in table mode, which will bring up the option chains. Now, I'm going to go, I like to go 30 to 45 days to expiration. Here's the 40 day, the January 17th, 2025. We'll click on that to open up that chain. And then we are going to sell a put credit spread. Puts are on the right, calls are on the left. One option contract controls 100 shares of stock. And right now the price is $389. So if you were to buy Tesla shares at $389, 100 shares would cost you $38,922 for which we're going to utilize an option contract. It's much less expensive to do it that way, and we can make some great profits. So we are going to first look at the put side. So we're going to buy. So buy is right here, or sell right here, buy on the right, sell is right here. And we're going to look at the 320 strike on the put side. And wow, this is what's beautiful. It is the 12 delta. So unbelievable that we can go this wide. And the reason we can do that right here, IV rank of 58. So 320, and then we're going to buy the 310. So this is a $10 wide, and we're collecting $1.45. So for 100 shares, that's $145. So we want to collect a third the width of our strike. We're going $10 wide, but we're going $10 wide on the call side as well. So we're looking to collect around $300. And you can see right here, 145 is our max profit. So if we were to hit this right now, that's what we would collect upon placing the trade. We can go to curve mode, and you can see we're profitable above this 320 in the green profit range there. So this is the call side. Now let's go to the put, that's the put side. Now let's go to the call side, and I'm going to look at the 450, which is the 29 delta. So because we're so high right now, if you look here on the chart, we've had a big move up recently right here. So I'm looking to stay within this range. I'm going to go 325 to 450. Look at this range down here. We traded in this range the whole year, and now we broke out. So I'm expecting us to stay in this range, but we can go from 325 to 455. And as long as we stay in that range, we're going to collect $300. So we're going to sell the 455, and then we're going to buy. Buy is on the right on the call side, which is calls on the left, puts on the right. We're going to buy the 465. So we're going to collect $3.13, which is really $313. So our max, the amount of buying power that we're utilizing is our max loss. We can't lose on both sides. So the max we can lose is $687, which is that $10 wide, so $1,000 minus the $313. And our max profit is the $313. We would hit review and send and place the trade, but I want to show you, if we go to curve mode, you can see this huge profit range that we have between the 320 and 455. And because we're collecting that 313, you subtract that here, and our break even is even a little bit less than that. So it's 320 minus 313, and on the top side it's 455 plus 313. So from here, we hit review and send and place the trade. So you're probably thinking, Darren, how did you get that 300% annualized return number? Well, let's break it down. All right, so the max profit is $300. That's the premium that we collect. And I'm rounding the numbers. It was actually $313, but premium collected when we place the trade. Our max risk is $700, and that's the spread minus the premium. So our return on risk per trade is 42%. Our monthly calculation is the total potential return is 514%. Wow, annualized return. So much more than that 300%. But this is assuming that we're consistently successful in all 12 monthly cycles, and there's no losing trades factored into the calculation. But you know what I like to kind of think about really is making that, you know, not every month, but there's going to be a couple months where we don't make that return. But if we or we roll early our trade to the next month, and IVR can change as well. But you can see right now where we can make well over 300% utilizing this strategy month after month, as long as Tesla stays in the trading range. Here's another way to think about it that kind of makes more sense to me. So $300 times 12 months is $3,600, and we're risking $700. But if we don't collect that full 300 and we roll early, say we collect 200, it's times 12 months, 200 is $2,400, okay? So keep that in mind. Now, if we have a $700 profit on a $700 at-risk investment, that's 100% profit. A $1,400 profit is 200%, And at 2100, we had $700 more. Profit is 300%. And then at 2800 is 400%. And at 3500 is 500%. So even at $200, collecting 2/3 of the amount that we would collect if it stays within the range, and 2400 is still above the $2,100 profit range of 300%, and we're making 300%. So it's very doable, in my opinion. Now, trade management of Iron Condors is another whole topic, but there's several things that we can do in managing the Iron Condor option trade. We can take profits early. So if Tesla moves quickly, then we can consider closing the entire position before expiration to lock in the gains and capitalize on any remaining extrinsic value. And we can also roll for additional credits. So if Tesla remains range bound, we can roll the entire Iron Condor to a later expiration date and collect more premium and extend the profit opportunity. We can readjust those strikes as well. We can also wait and try to collect the full premium. I normally wait if we're still within the range as long as possible, down to the 5 or 10 day period. And if we are at 15 to 20 days and we approach a short strike, then I'll often roll out, readjust the strikes. So that's the next step, adjusting the strikes. There's different ways to look at it. So if it moves to one of the short strikes, we can consider rolling that side further out of the money to widen the profit zone and reduce risk. And we can also roll the untested side to collect additional premium. And finally, we can set profit targets for ourselves. So some people like to close and take the trade off the table when they've captured 50 to 75% of the max profit. So remember, 300% gains are possible, but they're not always guaranteed. And hey, thanks for watching the video. Please remember to hit like and subscribe down below. Let's get at least 100 likes. Remember to download the free options workshop. Leave a comment, ask a question. I answer every one, and I'll see you in the next video.